Hello and welcome back to another episode of the Daily Crypto Byte. Today is Wednesday, November 17th, and we saw a little bit more of a sell-off last night. Hopefully we can quell some fears today by looking at some charts, looking at some on-chain metrics, and seeing where we're going from here. Before we dive into it, Mr. CJ Reichel, how are you doing today on this Wednesday morning?
I'm not afraid. Are you afraid? No, I'm just kidding. I'm doing well, Monty. How are you, sir?
I am doing well myself. I am not afraid. Like you said, I think that this is something we see quite often in Bitcoin markets. It looks like we may be getting a bounce here today, but lots of fear in the Asian market. Once again, Bitcoin gets banned in China. I feel like a little bit of deja vu with that news, but it did have an effect in the market. We sold off a little bit. Asian whales seem to be very risk off right now, and that's had a profound effect on the market. That being said, I still am very optimistic for end of year, and we'll talk about a little bit why here today. So, yeah, I'm doing good, CJ, ready to talk some Bitcoin. We also got a webinar today at 11:30 where you can ask us any questions or anything you want to talk about in crypto. It's for members. We would love to have you in there asking us some questions. But before we get ahead of ourselves, let's do a little bit of Daily Crypto Byte. What do you say, CJ?
Yeah, let's jump into the charts here. So I guess I'll first start by saying that pretty much everybody is waiting for 53K as that macro higher low. I don't think it's going to happen. Don't get me wrong, it could. I'm not going to say it's impossible that it couldn't happen, but I'm not going to be waiting for it. Anything under 60K, I'm buying. If we just look at things such as RSI, we're already oversold. We're reaching levels that we really haven't hit since, back in our retrace in September. So I think that while sure we could test 58K once more, I think the majority of the downside move has subsided. And I think it's time to start accumulating again and scaling in. So anything below 60,000, I think is going to be a really great macro buy for Bitcoin. And I expect us to continue to trend throughout late November and early December up into kind of the 72 to 77 range. I actually do want to share some liquidation data and some leverage funding data as well. So yeah, if we look at funding rates, we're basically seeing somewhat of a return to neutral and the decline of leverage funding, specifically on the long side for Binance here. When we look at liquidations, we've had quite a bit over the last few days, kind of the similar amount as what we saw previously in September near our local bottom. So, I'm not waiting for 53K or anything of that sort. So.
Yeah, that is the level that everyone's got their eyes on, 53K. 58K did hold up nicely in the interim, but, who knows what this Asian market can decide to do tonight at around, 5, 6 p.m. Central. You're going to have to be nimble in these markets and definitely pay attention to the technicals. But one thing that I definitely want to mention that Caesar points out in the chat is that Bitcoin dominance seems to be dropping. Bitcoin dominance had a very interesting 24 hours, as it tends to when we have these sort of strong pullbacks in Bitcoin. So let's quickly dive into the Bitcoin dominance chart and just take a look at what we're seeing here. So we had been showcasing this 44% level as a highly critical level for Bitcoin dominance. It coincides with this 20-period smooth moving average and has historically acted as either support, like we kind of saw here before breaking down, or resistance, like we saw here just last week. It was acting as resistance last night, but this morning, or last night when we minted that new candle, we did shoot up above that moving average. Bitcoin dominance climbed up to about 44.5%, but now since then it has fallen back a little bit. And I think a lot of that has to do with the performance of altcoins. We've talked about this in the past as sort of a volatility index for crypto, and I think that we're kind of seeing this here. When Bitcoin dominance rises, the market's sort of going a little bit risk off with this sort of liquidation events and the pullbacks that we've seen over the last 48 hours. But now that Bitcoin dominance has kind of seemingly starting to bounce from this 44.5% level, we've got a bit of a doji candle emerging here. I'll be watching for a breakdown below this 20-period smooth moving average as an indication that the market's back risk on and that the alts are ready to run again. So in some of the alts that I've taken profit in over the last 48 hours, perhaps when we get this breakdown below this 20-period smooth moving average, I'll be looking to reallocate back into some of those altcoins, because historically, like we saw just recently here at the end of October, when we get a breakdown below this level, it typically is accompanied by some very, very strong altcoin performance. So Bitcoin dominance at this critical level of 44%, it is looking like it may fall below that level. So just wanted to bring that to your attention here today.
Let's talk about ETH then, because that does have a little bit to do with Bitcoin dominance, of course.
Of course. And yes, ETH is definitely worth mentioning today. The gas fees for ETH, I think, is what are most important right now. And when we look at this price action from ETH, this thing has just been more or less steadily climbing since the that bottom in the middle of July there. And since that same point in time, we've seen a large increase in gas fees. Not too surprising, typically happens when we see a large increase in speculation with Ethereum. But that is indicative of the fact that there are developers building on the Ethereum blockchain. There's large institutional speculation occurring on the blockchain. And if we just look at this Bitcoin dominance chart, or this ETH gas fee chart, look at that big increase, and we're just steadily building from that time all the way back in July until now. There's been a strong paradigm shift in the amount of speculation that's been going on, the amount of development that's been going on the Ethereum blockchain. And that's boded well for many, many other assets in the space. One asset that's making all-time highs today that is looking very, very strong is Avalanche, AVAX. And CJ, I think you did a great job pointing this out in chat the other day. But AVAX has done a very good job of kind of stealing away some of those, not just speculators, but developers as well that are building on the Ethereum blockchain. AVAX is Solidity compatible, so really the skills transfer seamlessly. And in terms of what we're seeing for gas fees, they're a lot less on AVAX, a lot better throughput as well. So no surprise that increase in gas fees has led to an increase in speculation and development on the AVAX blockchain, and thus a very nice increase in performance as well. So just wanted to bring that to your attention, because definitely an interesting market dynamic.
Yeah, and we were talking, having kind of a fun meeting yesterday about, you look at companies like Amazon and Facebook, where they climbed steadily to $100-200 billion in market cap. And then in less than 5 years, they were over 1 trillion. So in my perspective, these utility chains, or I guess you could call them like the speed coins, the coins like Hedera, or the things, or Solana, or, good example, AVAX, the things that are geared towards high throughput to take developers away from Ethereum. It's kind of like a question, who is going to reach 100 billion in market cap first? I think Binance BSC, their smart chain, was one of the first to do it. They did reach 100 billion in market cap because of that, because they took a ton of Ethereum developers into this new ecosystem because of those high gas fees. And I think the same is happening with Avalanche and many of those others. So long story short, I think Avalanche is going to be one of those on the road to 100 billion. And I own quite a bit of it in relation to my overall portfolio, and I love the amount that's staked. I guess this is kind of turning into the AVAX episode, but yeah, thank you for pointing that out. Let's get back to ETH.
Yeah, speaking of ETH, yeah, you want to pull up a chart?
Yeah, so showcasing some new cool charts that's coming on the platform soon. But this is our dev environment that we've been testing. A lot of new cool stuff, charting features. But overall, ETH is in a very similar place as BTC. Good amount of liquidations, a lot of oversold characteristics in the oscillators. And, it's one thing to go into oversold territory, but it's another thing to go in and then rebound back out, because typically once we go below the 30 line and then we come back across it, typically we rally from that point. As we can see when we compare where we are currently in the RSI to where we were on the 4-hour back in September, I think ETH is near a bottom. It's like BTC. So, I'm not going to be waiting for like a $3,600 or even a $3,800 ETH. I'm willing to accumulate below 420 or 4,200 here.
Yeah, CJ, and you're speaking about levels of accumulation. I don't know if you noted, I don't know if you saw this, but last night I got an alert from Look Into Bitcoin, and it was sharing a pretty interesting chart here. I just want to quickly pull this up. But essentially, it was talking about how after last night, we saw a dip into a range at which has historically been ideal levels to accumulate in terms of on-chain activity, that is. And we're seeing, comparable things in terms of relative unrealized profit and loss, which is essentially just the market cap minus the realized cap, meaning the value at which the coin was, sold for, divided by the market cap. And as you can see, in terms of a market cycle, psychology, we are still in this optimism denial period, actually, in the kind of midpoint of it here, well below this middle threshold, which I think is definitely worth noting. Typically when we see these talks of being near top of a market cycle, as you can see from the chart, we'll be in these fears of greed or euphoria, and that tends to typically coincide with these market cycle tops. So right now, we're falling very quickly into this kind of optimism and denial range, which has historically been an ideal level to accumulate right before we kind of take off into these greedy areas and we get that parabolic price action. So thought that was worth noting, but just wanted to quickly bring that up.
Fear and greed also. Who said it? David. Very astute observation. And we'll see if we see 30. I think already the reset to 52 is probably substantial enough. If people think we're going to 53K and are waiting for it, there's a good chance that it doesn't come. But even if it does, like, I'm fine buying 33% of a hypothetical position, at 59 or 58, and then I'll sit with that. It's fine. I'd rather not have to wait for 52 and then buy back at 64 or 66 when price starts rallying again, because when the bulls come back into the market, if they do, they're going to come pretty strongly in my view. So it's going to be interesting, but I think we just needed a little bit of a flush here after reaching new all-time highs. But any expansion on that at all, Monty? Anything we've left out?
No, I think you hit all the major points there. As always, we'll be doing our Doge of the Day for the members right after this. And like I said at the beginning of the show, we'll be doing a members-only webinar at 11:30 Central Time. Any questions you have about crypto, any assets you want us to do TA on, literally anything at all, you just want to come chat, you can come do that. You can try it at the marketrebellion.com/try crypto link that is scrolling at the bottom of the screen now. You can try it for just $7 for the first month, or first week, excuse me. We have a pro charting service, a global community of traders from all around the world, 24/7 chat. I was in there last night chatting with Josh, Dr. Singh, a few other guys pretty late last night, talking about some crypto price action. Always a good time over there in the crypto room. So head over there and check that out at marketrebellion.com/try crypto.
Please let us know in the comments too what your favorite time of the day is to trade crypto, because mine, I think, always the most exciting is 5 p.m. to 6 p.m. here in Chicago. I know I said that yesterday, but it's a great time because you have so much time to prepare and look at stuff and study before volume picks up, when Tokyo, Seoul, and all those major cities, Singapore, really wake up. So that's when things start really booming. But overall, I hope you guys have a great day wherever you are in the world. Stay disciplined, trade stronger. But that's all we got. Thank you so much for watching.